Hey guys, and welcome back to the Value Investor Show. Wall Street is hitting peak fear, maximum panic in the healthcare sector, and United Health Group is next in line. Well, what do I mean by that? Firstly, Elevance Health just reported their earnings and the stock is down 20+%. So for today, I want to talk about what happened to Elevance stock, what investors have said, what Elevance shared in their earnings. Did they beat or did they miss? And most importantly, what this means for UNH. As many of you know, UNH is reporting earnings in just a week and a half on July 29th. So we're looking at the scenario we might be facing, an intrinsic value of the business, a price target, and at what point I personally would buy or sell after earnings. Before we dive in, I want to thank you all for the amazing support on recent videos. I got thousands of views, hundreds of comments, but still only 2% of you are subscribed. So it would mean a lot to me if you hit that button, that subscribe button. I spent hours researching these companies and putting together slides for free for you guys. So all I ask is you subscribe, you like, and do leave a comment if you have questions. So let's get right into it. The Healthcare Select Sector SBDR Fund, an ETF that tracks the healthcare sector, is now at its lowest level in 25 years. This is exactly where long-term value investors want to be. When the fear is at its peak, when no one wants to be in healthcare, that's when we hunt for value. So as health insurance are suffering in its earnings season, we have all the US largest health insurance companies reporting. Elevance Health just reported on July 17th, and we have more coming up: UNH, CVS, Oscar, and others. So what happened last week with Elevance gives us a very good direction of what could happen to UNH next week. And as you see on the right hand side, UNH is the biggest player in the space, followed by CVS, Elevance, and others. So what happened to Elevance Health? Well, see, Elevance reported earnings last week and their stock dropped 20% immediately after. Keep in mind, this has already been a relatively beaten down stock, not to the extent that UNH has been, but it has been down 30% from all-time highs here. And now with another 20% drop, it's trading at 50% from its peak less than a year ago. So what happened? First of all, Elevance Health beat revenue estimates by 3%. As they grew 14% year on year, which is impressive. It's fantastic. However, they did beat EPS estimates by 1%. Another thing to indicate here is that they have also been buying back stock and they have also distributed in dividends. So overall, Elevance is performing well in terms of consistency, but short-term headwinds have clearly affected EPS, and that's something that we expected as well. With that being said, as I have said in the previous videos, just like UNH, Elevance has historically been consistent in EPS growth and beating estimates. But this year, the industry is under pressure. It's not the UNH problem, it's not an Elevance problem, but ACA, V28 implementation, Medicaid, all of this has led to rising costs, and every major health insurer is struggling right now. So what is triggering the sell-off? Well, they have lowered their 2025 EPS guidance to 30 EPS, and that has caused investors to panic. But I believe they're just being conservative. Let's be real. The issues in healthcare are not new. We know that there are issues. We've known about it for a year now, and all the players are under the same pressure. They're all trying to mitigate it using AI-driven solution, but it's going to take time to recover. I want to show you guys this because this is important. The insiders have been purchasing for Elevance for the first time in over 8 years. Elevance CEO just bought 2.5 million worth of stock, increasing his ownership by 6% right after the earnings drop, as you see here on the red dot. Now, we've seen this before in the last few months. Firstly, Humana Health Insurance CEO added a few months ago. He added thousands and thousands of stocks. And also we've seen it in UNH where their CEO, Stephen Hemsley, has added 24 million worth of stock just in April. And we also also have members of Congress buying into healthcare now. We also are seeing other directors buying into healthcare. This insider activity is a green flag because it's showing confidence in the future rebound. But let's go back to UNH as we are about to see their earnings. So UNH is reporting earnings next week on July 29th, and here is what analysts are expecting. Firstly, analysts are expecting 12 or 13% year-on-year revenue growth and a negative 28% EPS decline year-on-year, which is massive. And just to compare it to what Elevance had, was 14% revenue growth and 20% EPS drop. So UNH is being priced for worse EPS already. In my view, UNH might actually beat expectations both in the revenue and EPS perspective because the market, the analyst, the Wall Street has already priced in the worst case scenario. So as you can see here, guys, year on year, analysts are expecting a 20% decline in EPS compared to Q2 of forward year 24. So in my opinion, UNH is going to beat earnings. Now, in terms of the valuation and the forecast, my model already accounts for a major drop in 2025. In my model, I have already modeled a drop in 2025. I've forecasted revenues, net income, and profit margin to grow starting from 2026 onwards. And as we've seen with ELV, revenue is not expected to be impacted overall in the healthcare industry. As memberships are growing, that drives revenue. But net income and margins are hugely under pressure from rising costs, and as I said, this has already been priced in the stock as the stock is trading at levels not seen since 2008. Now let's break down clearly what went wrong and what needs to go right. Firstly, there are three things that went wrong. Number one, leadership changes. Andrew Whitty, the previous CEO, resigned in 2025 after UNH missed earnings for the first time since 2008. That's 17 years of beating earnings consistently. The second thing that's going wrong is that the DOJ is investigating and there are certain lawsuits against UNH. UNH, as the market leader, is taking most of the scrutiny, and also this is not something that we haven't seen before. The healthcare industry is always under investigation, is always under lawsuit. Thirdly, there are rising costs. As I said, is the V28, the pricing issues with it, the underperforming Medicare Advantage member selection. Those factors are squeezing profitability. Now, there are a few things that need to go right in order to fix those problems. Number one is the new CEO, Stephen Hemsley. He was actually the former CEO of UNH from 2006 to 2017. He had an amazing track record under whom the stock grew 6 to 7 times in size, and he's an expert. He's known for his operational efficiency. He's also the mastermind behind Optum Health. The second thing that needs to go right is the settlement of lawsuits. Healthcare is no stranger to investigations, as I said. Most are settled and or amount to nothing, so it's just a matter of time because before UNH just gets rid of those lawsuits. And thirdly is time. We need to give time to UNH to bounce back. This is a long-term value investment. UNH needs at least 2 to 3 years to reprice their plans, to improve margins and execute. Membership is growing, so revenue will rise. So the company just needs to improve efficiency, and that's Hemsley's, the current CEO's strength. Now for you guys today, I've put together a base case valuation. As I said, I've already priced in the drop in net income and free cash flow for 2025. And from that point onwards, I have used conservative assumptions in terms of growth resumes from 2026 onwards. It will take around 2028 to 2029 for UNH to get back to where they were in 2023. So it will take 3 to 4 years to get back to where they were in terms of their net income on a per year basis, their free cash flow on a per year basis. And under this scenario, the average intrinsic value for the business is 225, which is just 20% below the current price. And with that being said, my target price for 2030 is $600 to $700, which in my eyes is still very conservative. I'll share my bull case only after the July 29th earnings report, because I want to see what the leadership says. I want to read through their financials, and I want to see how they're setting up the company for the future. Now, am I buying or am I selling? Well, if UNH misses EPS estimates, I do expect a further 10 to 15% drop in their stock price, just based on the fact that ELV had the same. And I will be buying anything below $260 to $250. Now the stock is trading on $280, so it's very, very close. And it will also depend on what the leadership has to say and how confident they are in mitigating these issues that they are facing and focusing on long-term value creation. I very much look forward to the earnings, and I will possibly be adding more to my position. As I close, I want to thank you guys again for watching. Please like, subscribe, leave a comment. I always respond to your questions and feedback, and do follow me on X because I always provide updates there on a daily basis. Thank you, and see you at the next one.